Welcome back to the Kingscrowd. This is a company currently raising on WeFunder. We're going to look at the business, the market, the terms, the risks, everything else. We'll talk you through it and how investors might evaluate a deal. As a real quick plug before we jump into today's sessions, Q3 Demo Day. This is an event that we put on every quarter for Kingscrowd, and it's an online virtual event. It's going to be happening next month. Right now, the tentative date is Monday, July 27th. So head over to kingscrowd.com, click on Insights and Events, and you can register for that. Make sure you get on that. It's completely free. It's a great way to see some of the best companies that are out there who are raising to pitch live, and you can ask them your questions. There's audience voting, and it's a great time. All right, let's jump into our first segment. So before we dive into the deal review today, we wanted to talk about something to spend a few minutes and go over something that sounds kind of dry to a lot of people, the SEC and regulations, but it's actually really important for the online private markets and for startup investing. So in early June, the SEC just released their draft strategic plan for fiscal years 26 through 2030, basically opened it up for public comment. Now, again, this is not a rule proposal, so it's not proposed changes, but it's more like the SEC saying, here are the priorities that we're thinking about over the next couple of years. Please give this a review. We want to hear your comments and your feedback. So I wanted to bring up a few things that really stood out to us here at Kingscrowd. Now, the SEC often talks about capital formation, things like investor protection, expanding access for the private markets to more investors, all those types of things. This really matters for everyday investors because it's not just whether information is technically disclosed, but it's like, is it actually usable? Like, can investors actually find what they need? So through that lens, we're submitting a comment letter. And we kind of compiled all of the feedback through the dozens, if not hundreds or thousands of raises that we've looked at and reviewed here at Kingscrowd. We're going to be submitting that to the SEC. So we're going to be talking about things like giving us more structured data in terms of filings when you're looking at Reg CF and Reg A filings, things like requiring valuations to be disclosed, searchable PDFs for offering documents, standardizing financial fields. There's a bunch of really good things in there that will make the investor experience more useful, much better. So before I go over more of that, Léa, I want to bring you in, as a private markets specialist and analyst who has looked at probably, again, hundreds or thousands of deals. What are some of the top items on your wish list that, you would want the SEC to consider?
Thank you, Brian, for asking me that, because there's a lot of things, but I'll just kind of reduce it to 3 items today for our conversation. The very first thing, and I think we've been talking about it over and over and over again on this podcast, is investors need to know clearly what is the valuation of the company that they invest in. And I feel like I don't understand why there's not an obligation for companies to disclose that. If you want to make private investing truly democratized, truly accessible to everybody, regardless of their, investment or mathematics skills or whatever, you need to be able to make founders, to make companies forced to disclose that valuation publicly. So that's the very first item.
That is so important, because I think sometimes people might think, oh, price per share, though, if it's $1 or $10, that tells me, is it cheap or expensive? Mm-hmm. No, right? Like, the price per share is a completely arbitrary thing. So if we're a company, let's just go to the extreme. Let's say we have 1 share in our company, right? And it could be valued at $1 million. valuation of our company is one, the price per share times the number of shares, it's $1 million. We could also have 1 million shares at $1 per share, and we have the exact same valuation. But it's not whether it's $1 a share or $1 million a share. It's what is the valuation of the company. And that's something that, yes, we talk about this at end nonstop internally. So please, SEC, I know you're listening to this. Let's think about valuations and how we can make that more in the hands of investors. All right, what's your number 2, Léa?
Yeah, I mean, what matters ultimately is what is the price at which the company is going to be acquired at in the case of an acquisition. So yeah, extremely important. Number 2, I think there should be a rule that should force companies to provide regular updates after an investment, at least once a year. And I know what you're going to tell me. There's already a rule that says companies need to be filing CARs. Well, maybe the first thing will be actually enforcing that companies are filing their yearly CARs and providing updates to investors. Unfortunately, too many companies go dark. We don't know what is going on with them. We don't know what's the revenue. And maybe founders, companies do not know that when they start raising online, what they're going to have to be doing public disclosure for a long time after their raise. Maybe they're not ready to do that. And it's something that probably should be made more clear to them. Filing a CR doesn't take that much time. It's not that expensive, right? Kingscrowd Raise Paper provide that service for a very affordable price. But I wish as an investor, we would actually know what is going on with the companies that we invested in, because we own shares, right? We own a part of that company. So we should have information about this company and the progress or all the problems that they're having. And I think
Shameless
that,
plug. I'm going to hop in real quick. If you're a founder out there and you're like, how can I provide better updates to my investors? Hey, Kingscrowd has a free investor relations tool, free, where you can basically provide updates. You create your own page. It gets pre-populated based on your existing SEC filings. You can invite all your investors, post your updates there. It gives them one place to go to get all the updates. So even if you've done 4 or 5 offerings on different funding portals, platforms, maybe you have VCs, offline investors, you manage them all in one place. It sends out free email updates every time you want to post an update. You can do things like FAQs and contact, and that way you're getting ahead of the questions that you're going to get from investors. And it's kind of that, the best defense is a good offense. Like if you have your investors up to date, they're not going to be reaching out to you nonstop for updates. So that reduces the amount of questions that you are going to get as a founder. So check that out, ir.kingscrowd.com. All right, Léa, back to you. Number 3.
I wish there will be more information given to investors when companies are about to exit. And I know that sometimes there is some secrecy that is required around acquisitions or around going public. But I feel like it's very important for companies to help investors know how are they going to be able to get their shares back. Even just sending a summary, right? Let's say the company is going public. Do you have a lockup period? What is the price at which they will want to sell their shares? Sometimes, companies are not really allowed to talk about that price. But I've seen companies that kind of far in advance give a range, and that kind of legally works to give a range. Just let people do the math. You just kind of give some hints, and that just brings a lot of clarity for investors, and they kind of already know whether they want to position themselves on that exit or not. So number 3 will be helping investors more at the time of exit.
Awesome. Well, thank you, Léa. And, I hope for everyone watching out there, again, whether you're a founder, an investor, a professional in the industry, like we are your voice. We are here to, we're working with the SEC, sending these comment letters. We're the ones who are out there with you on the front lines, looking at these deals, digging through multiple 100-page offering documents, trying to figure out which attachment is the offering document and which one are the financials, all these types of things. We're going to be giving that feedback. So we really hope the SEC will be receiving that, and then hopefully we will get some improvements out of that. Thank you, Léa. Great updates in terms of just what's going on at the SEC. And if anyone else is out there and wants to submit a comment letter, you can definitely check that out. So you can just look for the SEC strategic plan. Again, they released that in early June, looking for comments. All right, let's move on to our second segment. So let's shift from kind of the policy to the practical side. We're going to be looking at a deal review today. And the deal is Harmony Baby Nutrition. So this is a company currently raising on WeFunder, and they're basically tackling a market that's both massive but also deeply personal, and that is infant and toddler nutrition. Now, their basically general pitch is around the idea that traditional baby formulas and toddler formulas haven't changed enough, especially for babies with allergies, sensitivities, that type of thing. Now, on the WeFunder page, they go through a lot of things that make this potentially interesting, like prior venture backing. They also have grants as a non-dilutive funding source, a repeat founder, different patents, dozens of prototypes. Léa, help break this down for us. Give us an overview of what this company is and what investors need to know.
Yeah, so Harmony Baby Nutrition, the big vision is a company that wants to produce human milk protein for baby formula. So that sounds pretty futuristic, but actually, human milk protein are already being made by some companies that are, specialized on that segment. And so, what's very interesting that this is not obviously made thanks to women. This is made thanks to microbes that are producing in the lab this protein. So this is a technology that is known, but the big gap here is that there's no formula on the market that is actually using these proteins. Why? Because as personal as you say baby formula is, Brian, this is also a very sensitive topic, and babies are just so fragile that there's a lot of regulations, and the FDA is extremely strict on which companies is actually going to market. So what Harmony Baby Nutrition wants to do is to be able to commercialize a formula that is using these lab-made proteins. So let's talk a little bit about the go-to-market strategy here. And that's kind of the reason why I like this company, because I feel like they have a go-to-market strategy that is pretty pragmatic. So the very first product they're going to put on the market is a hypoallergenic baby formula nutrition that is using regular cow milk. So today, if you're not familiar with the formula market, there's basically the regular formula, then you have formulas that are called gentle. What that means is that the cow protein is broken down and it's easier for babies to digest. And kind of below that, you have the hypoallergenic category. And so they want to start by producing a formula in this hypoallergenic category that is not only, a good fit for babies that require more broken down proteins, but that actually tastes well. So I don't know if you've already tasted baby formula, but most of the time it doesn't taste really good, but especially kind of the more broken down the protein, the more disgusting it is. And so even if, babies don't really know what taste is and kind of they're forming the taste, but some of them just don't accept it, especially if you compare it to human breast milk that is actually kind of pretty sweet and pretty good. So in this category, I feel like it's very interesting to start with commercialization of his product, because it's going to help the company knows how to bring a product to market and how to get their brand to be known, how to actually get people to just talk about their company, talk about their brand. So I think that it's a very important first step. And what is interesting as well, that is not an infant formula, but a toddler formula. So there's kind of less regulations about it. So it's going to be way, way, way easier for them to start shaping the product. In the meantime, and they are doing that, they want to be collaborating with a company that is producing human milk protein and build that Gen 2 formula that is going to be, I want to say, maybe 50% close to what a human milk is. And so it's going to be using some human milk protein is going to be a dry powder type of formula. And so the idea is to kind of have a second step into bringing a product to market that is just way closer to what breast milk is. So Gen 3 is actually going to be a liquid-based formula. Why that? Because when you make a dry powder formula, you have to heat the formula, and so you're kind of losing the bioactive ingredients. What is going to be good of Gen 3 that is going to be 90% close to actual human milk, because not only is going to be using human proteins, but it's also going to be keeping all of these bioactive ingredients. Now you're never going to get a milk that is 100% as close as good to human milk protein, because you have things that human milk has, like antibodies, for example, that can help babies kind of fight viral disease and things like that. That is very important. But in not too many cases, you can have problems where babies don't latch, or maybe moms have to get back to work and pumping doesn't work and they can't really give them milk, or sometimes you have moms that for a lot of reasons just don't produce enough milk. And so there's a huge market of parents that wish they could give human milk to their babies but just can't. And if you're not familiar with the market, I'm not, and you want to know how big the demand is, I would advise you to go on Facebook. Go on human milk groups. You're going to find tons of human milk groups with constant daily demands of moms that are saying, please, my baby had XYZ problem. I really want to be able to give them human milk. Please help me. And people are trying to donate milk, but it's just extremely complicated, especially in today's society, to be pumping and freezing the milk and sharing them to people. It also involves some, health risk as well of getting milk from strangers. And so I think that the big demand here right now for me, it's not really the question. So this is about the company. Brian, is there any specific topic you want us to kind of dive in?
Yeah, that's, I had kind of two things that caught my eye as a potential investment opportunity that I thought were interesting we might want to discuss. One of them is around kind of their funding strategy. And then the second one is just around potential risks of regulation, or like, do these things have to be approved by the FDA? Maybe we could start with the second one because it's a little bit quicker. I'm just curious, they're obviously, as you mentioned, kind of going from that Gen 1 to the Gen 3 approach. So that like hypoallergenic to that full kind of global infant formula. What's the safety of those look like? Is there a risk that they have to go through a long process that's maybe more similar to like a biotech or a pharma company? Or like what happens whether it's FDA or something else approval being required for any of their products?
Yes, completely. There is a FDA approval that is required, and that's why you're looking at the valuation cap right now. It's a 35 million valuation cap, which is way too high for a CPG company, but pretty reasonable or in line with other biotech companies at similar stage. And so there's a company that is priced as a biotech company. It will take time to get FDA approval. This is risky, obviously. It may work, it may not work. I think there's a reason why this has not been done before. It's because it's complicated. But now that the technology is here, and what's very interesting is how dedicated, how passionate, how willing to get this done is the founding team. And when you look at Del Alfonso, he's a founder who has a history of needed to give human milk to his daughter and just not, having kind of issues doing that, having a baby with health issues. And when that type of situation where you've lived that pain, I feel like you really have the fuel that you need to bring a product like that to market. Not saying that this, de-risk, there are huge risks. But one of the other reasons why the company is putting on the market right now a hypoallergenic formula is because it's kind of buying it time. When you start getting revenue, you start getting a profit margin, it's a way to get capital and rely a little bit less on external funding. Now, they are still going to need external funding, and they already have some pretty impressive backing. For example, they've have raised from SOSV, so they went to AD Bio, which for me is probably one of the most futuristic VC fund that you can find out there. They just found a lot of forward-facing companies. And so, yeah, you can see Sapphire Partners, Artesian, Case Reventures, all big names that we know pretty well. So while this is exciting, they're going to have to raise more money again. And that's another reason why they're bringing to market this first product, is because if they can demonstrate to investors that they're able to commercialize the product, they're able to get some revenue in, they're able to get the brand now, then as soon as the product, the human milk protein product is going to be authorized on the market, they won't have to figure out anything on the commercialization stage. All the learnings will already be done, and they will just have to launch a new product, but the machine, kind of the commercialization machine, will already be working. So that's to answer your two questions, Brian.
Yeah, both of those points, the fact that it has to be FDA approved in their funding strategy, I think are so crucial for investors to understand, because if you just came across this real quickly and you said, oh, it's a baby food company, you might think, oh, it's going to be like a CPG or a DTC brand, right? But you look at the valuation, you look at the science backing, you look at, raising from both top tier VCs and also going the non-dilutive funding route, you realize it's a very different investment opportunity. You can't look through the lens the same as you would like a consumer packaged goods opportunity. You have to think of it more along the lines of that more capital intensive biotech. But I think one of the interesting and the more compelling things, like you mentioned, Léa, is it's not just all or nothing shooting for their Gen 3 to work, right? They have these milestone based approaches where they're releasing somewhat lower risk things along the way, so that it's not just all dependent on that longer, more capital intensive timeline. And they're able to learn. I think there are benefits of that. Like you mentioned, you said, people are going to be talking about it. They're building their brand. They're going to be interacting with their customers along the way. So they learn a lot more than they would if they were just in a lab trying to develop, this new formula for 5 years and then hoping that it works in the end and they get FDA approval. Anything else you want to say, Léa, before we sign off?
It's a company that can be changing the category of formula, because it's a product. If you look at the products that are sold in the United States, the first ingredient in too many formulas is going to be corn syrup or maltodextrin. And that definitely is not an ingredient that is naturally present into breast milk. The first protein that is present into breast milk is lactose. And when you want to access this type of products, well, first consumers kind of had to pay a higher price. But even if you pay the higher price and you give lactose-based milk to your baby, which definitely is great, you're still giving them cow milk. And ultimately, what is the most natural thing to give a human baby? It's a human milk. And I think that when you talk about a category that is just so sensitive, so personal as baby nutrition, customers are willing to pay the price to give what is best for the babies. And once you find a product that works for a baby, customers are not going to change. It's just way too sensitive. There's just too many complications that can occur. It's just too difficult to take care of a baby to be switching brands of formula every other day. So I think that if it's a company that is going to get some traction, that traction is going to stick. And when new parents will enter the market, they will be listening to, what other parents are telling them. And if parents are starting to spread the word about Harmony Baby Nutrition, I think that this is a company that can be there to stay and truly grow. So very excited about the deal.
Awesome. Well, thank you, Léa, for that excellent analysis. If you're an investor and you're interested in learning more, head over to kingscrowd.com and click on the top here, search for Harmony, click on Harmony Baby Nutrition. It will bring you to the deal page. You can see it has been rated and it actually was designated top deal. So this is a company that the Kingscrowd Capital Fund has invested in, but read Léa's analysis. If you're not already, we have analyst reports like this available for all the top deals, for many other deals that are available out there for investment by anyone, any individual like you. All right, we'll wrap things up there. Thank you again, Léa, and thank all of you for joining us. Thank you for supporting Kingscrowd. We'll see you back here for the next Kingscrowd podcast.